Alrighty, hold on. I'm just getting everything situated. Make sure the live stream is on YouTube, and then getting the stream set up on Discord. Fun market we're in, guys. It's a super fun, choppy market. Okay, I think I'm up and running in both areas. Let me just share the screen. We'll let everyone get in here. Go ahead and put some stuff in the chat if you guys want me to look at anything particular, but my consensus is the same, is that we are still going to go further down. You can't be scared of the market, though. You still need to kind of take dollar cost average into positions. We're going to go into that because people asked me. There we are. Okay. The main person is here with the question of what was the question again last night? Hold on, let me find it in the chat. It was because you were asking about Archer, and the weekly disappeared as of right now. It might come back, but remember, the weekly's got to end the week. And then the daily was triggering, but we're below the blue line. Okay. But I get jumping in early, feeling confident. Again. Okay. I said, I know we're seeing some diamonds present themselves, but you need to take into account the entire market condition, meaning the macros. Okay. And just the feeling of which, again, the market is. Now, if you're following the dollar cost averaging like I did for Navitas yesterday, this was a neutral candle here. So typically, neutral, again, is going to be an opinion of yours. So I'm bullish for Navitas, and I haven't started a position yet. I wasn't looking during these times because I was getting out of ASTS, or I was getting out of Rocket Labs, and I was trying to, get the community set up, and I just wasn't really focused. So right here in this range, like, I'm not fighting for that $9 to, this $9.50 range. Like, 50 cents isn't the big picture to me. Obviously, if I could time the bottom, awesome, but I only did 10% of what my total position will be. So 300 shares. Okay. I bought 300 shares. I just started a position. If we go down further and get more of our trigger and diamonds and everything, cool. What I also was looking at for that Navitas buy was also, we touched here, we touched here, we touched here, we touched here. Okay, so there's been a lot of support on this line that I knew the downside wasn't incredibly big. That it wouldn't trigger another diamond right here if we just saw this little dip and then back up. Okay, so I was willing to take a 10% position. It's not the end of the world, right? If it goes down, I'll dollar cost average down on the next diamond, right? Just follow the diamonds. But what do I mean by you said interesting? I'll be curious on how you measure this. A lot of the time we talk about noise, and it is to be ignored. What should be ignored and what should we pay attention to is the question that you have. So I hopped on the live stream quickly last night to answer this question. I know you guys didn't get a chance to. It was just last second. I was just like, let me hop on because it's easier to explain in words than it is easier to explain and me trying to type everything out and then you trying to hear the tone in my voice basically through messaging. And my thought process is, when I'm talking about how I feel about the market conditions and whether or not I should follow that diamond with the momentum, is that if I don't really if I have my current positions I'm in, right? I'm in SoFi, I'm in HIMS, I'm in SBET, I'm in Oscar, right? And Archer, I'm in Archer, right? So if I have those positions, I'm ignoring the noise as far as I need to sell those positions. I'm ignoring the noise, right? I don't care to sell. Now, I can listen to the noise in order to determine if I want to start a new position or get into a stock, right? That's different because I currently have cash sitting on the sideline and I need to determine if the risk is worth putting more cash into the market. Now, cash I already have in the market is different than cash I have sitting outside the market, right? Cash I have outside is cash I have physically. I don't have to lose it. I don't have to make anything with it. Um, so that's the part where I say, okay, listen to the noise. Okay, doesn't mean like what they say is always 100% true, right? Do some more digging and read into everything. But so far we've witnessed earnings come out. Even if you have good earnings and you give equal guidance, the stock tanks. Okay, if you have bad earnings but give good guidance, the stock goes up. um, Macroeconomics come out bad, tanks. Today macroeconomics come out pretty good, still tanks, right? So the market is just not in a good place right now. So a 10% ad, not the end of the world. Navitas again, long term semiconductors, data centers, Navitas. But I am not leaning in to any positions with the current market conditions. Now, I thought with the good macros today, I was better to just take the 10% position. I thought maybe we'll get a little run up and rally into maybe Friday. Um, and it's still the day's young, right? We're only an hour into the market, but that's what I mean by the diamonds. Now I know you were talking about Archer, and remember I was saying, here we go. Let's pull it up. So if you have, make sure you go get the elite strategy so you can see which buys that I am more interested in. Okay, because it'll take out some of this noise. Like this diamond didn't listen, this diamond didn't listen, this diamond was more listened to. Okay, these ones didn't listen, and then we haven't had one yet under this blue line. Okay, we haven't had anything. So make sure that you have the elite strategy so that way these arrows will populate for you. And I do believe the arrows populate the following day. Okay. And that's because one, TradingView doesn't allow it to populate live. I believe we're watching it happen right now as we get into it more. But the arrows and back testing wise actually do better buying the following day, because typically on a really big green day, right, momentum comes up, big green day, the following day actually you'll see that big green day pull back slightly in the morning and then maybe go higher. So typically if you buy the following day in the morning, you'll grab just a small pullback from where the high was yesterday. On average, it's not every single time, but on average that tends to be how it works. So um, even with the diamonds. So yeah, the arrows are the backtest strategy. So it's just TradingView's backtesting strategy. Um, and this follows kind of more of what I'm looking for. It's just being not as aggressive with buying as frequent. It's a little less aggressive. And you can change the settings. So I'll go through it real quick, but if you like view it, right, it'll show you this win loss. I think it actually you hit this little bar right here, and I think it actually does this equity chart and it tells you here, but what I go to is trade analysis. Okay, and when I look at this, you can adjust the settings. So if I adjust these and go to your inputs, okay, I have it follow weekly or monthly. So if the weekly or monthly time frame are bullish, okay, it's buying. One of the two need to be bullish, okay? Now you can adjust it. Do you only want it to follow monthly bullishness? If you only want to follow monthly bullishness, it'll only give you the buys. Um, trimming and selling will be always. I don't care what time frame is bullish or bearish. I rather you be safe and know all the trimming timing. But if you only want to follow the monthly, follow the monthly. If you only want to follow the weekly, follow the weekly. It's not as accurate, right? Because the bigger time frames, but the bigger time frames also lag. So sometimes you don't get into every trade at a better opportunity. So I like to just make sure the weekly or the monthly, the bigger time frames are bullish for us to now trade on our daily time frame. Okay. Um, but if you want to do both, do both. If you only want to do one of them, and again, what I would do is you can go when you're looking into a new ticker and everything, right? And you like are like, well, I don't know. Should I follow the monthly on this one or the weekly? Well, take a look. Follow the weekly. Okay, that's not as good of a win percentage as the monthly. So I should follow the monthly time frame when I'm on Archer, right? You can take a look at that and then leave it for Archer and adjust, But for me, I just, to make it easier and more rounded back testing wise, consistency, the weekly and monthly was plenty win ratio as far as that goes. But if you want to be more picky, some stocks don't do well on monthly because it lags too much to the volatility, right? A company that's super volatile that can go up to 40 and then within a week drop down to 20 and back up to 40, like monthly is going to lag way too much. So that's why I don't do that. Um, so yeah, so the neutral candles, okay, the gray candles are still up. Like this is still up for your interpretation. I There's three, right? This was technically gray, but the day was so bullish that it flipped red also. This started as a gray candle. By the end of the day, it was a red candle because it moved so much. But gray candle here, okay? Basically, this is a gray candle, okay? Up to your interpretation. Now, this was a green candle, so you might have added here, okay? I'm not going to add like so many gray candles, right? So, for example, Navitas, I talked about it just slightly, but I'll go back to it. Where is it? Where the heck? I thought it was down here. There it is. Like, if we take a look, right? Navitas, we had a buy here, we had a buy here, and we had the buy here. So yeah, I'm slightly buying where these other buys were. I'm just buying slightly higher. It's coming down, right? It's coming down slightly to where these ones are. So I was willing to take this gray one because we did have yellow and we did have green ones in this same zone, right? So like, and I've see it this trend line: one touch, two touch, three touch, four touch. Okay, tons of support. It's proven that it holds this line, right? I'm willing to jump in and take an initial position. I haven't, because I haven't started one. Now, if I started one already here and here, I wouldn't listen to this candle. I already own it there. I don't need to add it again right there, right? It's neutral. I don't need to do it. So that's what I mean. Like you can interpret the neutrals, right? If I already have, we'll go back to Archer because it's a good one for an example. Like if I already have enough Archer from here, right? There's a neutral, there's a neutral. So like it just depends what your current holding is. Like if I already have, for me, like I already have most my SoFi, right? You're asking about SoFi earlier. I already have 4,000 shares of SoFi. I would cap myself at 5,000 shares. So now I can be pickier with my SoFi because I already have plenty, right? So if you already have plenty of Archer, then you don't need to add on these neutral candles. You can be pickier about your candles. Now, if you're starting into Archer, yeah, probably a good idea to maybe add some here, add some here. You already added here. This isn't a big enough drop. Maybe don't do that one. Okay, these are green. I need to do these ones, right? Like, and it's on the support our bull bear line, right? That's how I would do it. So now I can't put a personal feeling inside of a strategy, right? I can only base it off data, numbers, moving averages, RSIs, William percentages. Like I have all that in this, right? I have it all in there, but I can't put my personal feeling or how I'm currently holding a position into this. I just have to make it as generic but as detailed as possible to help. Okay. Um, Before I keep going, let me just read. How do you determine the monthly bullishness by using the momentum indicator or the diamonds on the monthly green candle? Um, do you have a ticker example or anything I can pull up for your question? I would assume Oscar. So let's go monthly, and you want to go to Oscar. So, okay, so what's the question? Oscar, for example. So, how do you determine the monthly bullishness by using the momentum indicator? Okay, so right here. Okay, so using this indicator, how this works is this, and let me turn it red. Maybe it's just easier for seeing this. Okay. So this is stair stepping more and more bearish, right? Same thing, bearish, bearish, bearish. See how this is just keeps going down? Bearish, 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 bearish. Now we start seeing some bullish reversal, right? It's going back towards bullish. So boom. Now we got more bearishness. Now back to bullish. Bearish, 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 bearish. So if I can take a look at, let's go to something that's more like longer treading. Like here's SoFi, for example, right? Bearish, bearish, bearish. We got a monthly bullish flipped. Now this is bearish, right? We're heading back to zero, backed up, kind of chopping up, down, 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 down. So as we kept going up, guys, up, 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 this started telling us, okay, we're losing momentum, right? We're losing this momentum. So I always say look at the bigger time frames and then go down to the daily time frame so you can have a better understanding where is our momentum. So when we talked about how the market is looking, right? I'm bullish for SoFi. Super bullish for SoFi. Higher time frame, right? Right now, I understand that it's not a bullish time for SoFi, but overall SoFi big picture years wise, SoFi's bullish, right? But overall, we've seen this downtrending for the monthly time frame. So this is you guys both had questions about the momentum. So this is how I do it. I look at the monthly. Okay, this is the part where I can't put it into a strategy because there's multiple things to look at and I want to try to make it as easy as possible, and that's the goal. So if I can do this like daily, right? SoFi, okay. Yeah, here's a neutral. I already have plenty of stock, right? I already have plenty. So I didn't listen to this neutral. This was a big red day, and it's not a bad spot. Do I think in a year from now, $22, I think is a double, right? I think the stock could go easily to 45, just like everyone else in the community believes SoFi can easily get to $45. So will you be mad at owning SoFi for $22 in a year from now? At least a portion of SoFi at 22, right? You don't go all in on a diamond. We dollar cost average in. So, no, I think at $22, you will see a double up. You will have 100% return. Um, we don't get this buy. Why? Because we are below this blue, right? We're below the blue. So, we're not following this, okay? Now we're looking for something more like a weekly, okay? We came up, we tested it, and now we're rejecting it, right? Not interested yet. I'm waiting. So, if we look at the, like I said, if you take a look at the monthly, okay, it was telling us we're trending down, and all you got to do, guys, is monthly. It takes a long time for a monthly, and it might not end bearish, right? The month is 11 days in. We still have time for the monthly. So if I'm not answering your question, please tell me. But if you take a look here, right, and just draw a line. This is way easier to draw a trend line on the momentum than it is to go find trend lines on here, right? So you look at the monthly momentum. When it's bullish, you trade the weekly on daily using the indicator. So I always trade the daily time frame. Okay, I'm always trading it. So when you are on this, by the way, our arrows. Let me find one there. Our arrows will populate a weekly buy if you're just looking at the daily using the strategy. Okay, using this elite strategy, it will tell you there was a weekly buy right here. Okay, let's see if there's any other ones. Weekly buy, weekly buy. This is IPO time. Again, I don't buy during these IPO moments. If you want to see those, you can adjust this. So if I change this to 2 years, I think it'll knock all that out. And 2 year time frame, this is the start of buying. Okay, so weekly buy right there. So if you're on the daily time frame, it'll tell you which weekly buys I would buy. Okay, so that's awesome. I always start when I just want to look into a company and see where everything is. I look at the monthly to have a bigger understanding of where the big picture is currently trending. Now, inside of a big picture, right, we have moments of bullishness and bearishness, right? But inside of that picture, I want to understand what the big picture is. So right now, I see the big picture for SoFi is bearish. We can go to Archer, right? Bearish, big picture. Okay. We got to understand that this is big picture moment. Now, at some point, big picture has to reverse, right? At some point, we got to see some sort of reversal. So you want to be buying and taking advantage of these big dip opportunities. So that's why we can't be scared to take advantage. I, again, agree with your buy as far as Archer goes in this price range. That's not what I'm saying. But for me, I already own a lot of Archer, and I own it, and I'm underwater, and I didn't have diamonds when I initially did my purchasing with Archer, and now obviously I would have played it way differently. But I can't undo that. So for me, I have to have the price go down far enough to adjust my cost average enough to make sense. But long term, $9 or $8.95 or whatever my cost average is, I am not worried about $9, right? I think it's a at least a $14 stock in the within 12 months and I or this year, and then I really think it's an $18 stock, which is a double up. So I don't have a problem waiting for a double up where I'm currently positioned, right? So I just don't need to quickly jump into anything Archer related because I already have enough Archer. What made you think it was okay to buy today beyond the indicator? So I initially the jobs report, right? And I've talked about them kind of manipulating, I think, the numbers a little bit. So I thought the job report today was good. So I'll go back to what it was Navitas. So what we haven't had do we have a person on X that's a macro guy? I know our guy says breaking news. Um Market Wall Street, I think. So overall, I didn't. You can't be scared of the market, right? I'm trying not to be worried of the market as far as macros go. Okay, but typically, if we look back at patterns in history as well, okay, there's a lot. I'm gonna try to stay on topic. So this is the hard part. Okay, if we look, I'll just start with the patterns. Okay, beginning of the year, end of last year, right? February 2025, fall off. Okay. Let's go to where's our 2024 moments? Okay. April 2024, fall off. Okay. Where's the beginning of last year? Here's February 2023, fall off. Okay. Obviously, we had this 2021 bear market. Okay. Then we had February 2020, fall off. Okay. Where's another one? Okay, 2020. That's 2020. Sorry, trying to find. So overall, February, beginning of the year between January to April, somewhere in there, tends to be a pretty big correction. Okay. Just in general, looking at patterns, back testing previous years, looking in that time frame, there's a big sell off. Whether or not it's self manufactured by tariff news or actual macro news, right? With everything we're seeing with Japan cutting or raising interest rates in April is the news, right? April could be the trigger, right? Just because of that. It doesn't mean there's a bunch of things leading up to it, right? But that could be the trigger point. So there's a lot of things where it's like we should this isn't a time where I've been like I'm super excited, super aggressive, time to buy, right? Like if you look at here, like these are the times to buy. There's always a time to buy. Here's the time to buy. This has just constantly been telling us time to kind of get ready to sell. Like we shouldn't be 100% in this market right now, right? You could have these, yep, we go, 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 and then here's your little dips. Like these are the moments you want to get in. So, and typically a correction, right? And we'll go big picture. A correction happens in three waves. I don't know if you guys saw the Elliott wave photo I did, but if you know Elliott waves, and it's a you don't even need to know everything about Elliott waves, but there's a good thing to know about Elliott waves, right here. Okay. it's usually, like, a lot of the time, by usually, it is usually, I wish this would enlarge, is corrections happen typically in 3 waves, okay? You have the initial downturn, okay? Then you usually have a relief bounce, and this is where people take the opportunity to get out of their positions again because they didn't get this, but they recovered most of it, okay? So, and this is when people think, oh, the market's recovering, I should get in. That's not true. This is after the first correction, this is the opportunity to get out of any positions you wish you got out of. Okay? And then the final correction happens to one leg lower. So, if you take a look, and again, the SPY and all those are a little tougher than individual stocks are because they don't move as much, right? But we never made a higher high. We made a lower low, right? So this wasn't um I guess the wave again with the SPY it's a lot harder to count the waves, but I would have been and this is what I've been thinking is like here's wave 1 fall. Okay, and then we're going to have wave 2 fall and it's going to go right where this kind of support or just short of this support. Okay? So if we look what the percentage would be, okay, we had a nice on the SPY, 3%, right? And usually what has everyone been saying? A 5% drawback. So if we grab the top and then we go back to like a 5% drawback, it's going to be right somewhere there. Okay. So right at like a 660 mark. Okay. And if we go draw this little dip here, okay, we found support at the 0.5. Typically, okay, we find support, we bounce off 1 Fibonacci, we recover slightly, and then fall down 1 or 2 legs lower Fibonacci, which would be right here at the 661 to the 6, so basically 660 to 670. Okay, so if you learn Elliott waves, they come in those corrections. Let's do another one here, and let me just. And sometimes you can go to the bigger time frames and see it a little easier. But again, it's harder on the SPY because SPYs are filled with a bunch of companies versus just following one company's waves. I guess maybe SoFi will have it. So SoFi, we go to the daily time frame, right? It's just I'm thinking I thought this was going to happen here, bounce up a little higher, more relief bounce, but macros are just pulling us down. I thought as if we got a bounce to SoFi back to 25, I was going to trim because then the next leg down was going to bring us to the 17, 18, 19, this range, this little support level. Okay. That's what everyone's calling for. And that's where I'm being picky to buy my last wave. So the macros in general, right? We had good data. Oh, I can go to the VIX. That's where I go to see all the macros. If you don't know, go to the VIX on your trading view. I think if you have the events on there, it'll put these little flags and then you can click on it, right? So we did good with the payroll and better on the unemployment rate. Awesome. So that's good, right? But everything yesterday, that's only one thing, but I posted it in the Discord. It was bad. As far as retail sales go, was bad. There's 1 out of 6, I think, that beat retail sales. What tells us is retail people are not spending money right now. Okay. Why aren't they spending money? Because we don't have money to spend. We don't have any extra spending money right now like we did a year ago, roughly. If we take a look at the previous one here, what was this? Consumer sentiment was worse than previous and worse than forecasted, right? Job openings, less than forecasted. Okay. Services PMI just kind of came in with previous, so nothing really changed. Manufacturing PMI did good. That was good. So if you go through a bunch of them, like we haven't been super confident. Fed interest rate not changed. The Fed people are hawkish. Some are saying no interest rate cuts. Some are saying, 1, maybe 2, right? which is their job. Their job is to not be super like bullish because they don't want to trick people into thinking, and then all of a sudden they say we're not going to do something after they just said we are going to do something. So they're always going to be more bearish when they're speaking, and then hopefully their actions are more bullish, and then we can kind of go higher. There's a dance, right? And I'm just saying, macroeconomics wise, I don't think the world is ending. I do not think we're going into a 2008 crash. So yeah, the light green one is the previous support or previous trend line it was following right here. So you see how it touched here, and then once it lost it, that's the old trend line that you hope it recaptures. Okay, and then the dark green one is the current active trend line that it's using. That makes sense? Yep. So this was like the previous resistance, right? That it was following. So it hit here and then it hit here, and then it was trying to break here and here. So this was now the new resistance it needed to break. And now that we broke that, now you still see where this resistance is. Okay. Still see this resistance there. So you can kind of get an idea of where previously you might see more resistance and previously where you saw support. So it's just good to see the previous ones. But all I was saying as far as the sentiment goes, I'm still buying when companies are at 50% discounts compared to where they were, and I'm still bullish for them going forward, right? I still want to buy. Do I want to lean in? No, I don't want to lean in extra and go heavy. Because if you look at the indexes, we're still near all-time highs, or we just touched all-time highs, right? You don't lean in at all-time highs. You could dollar cost average to certain stocks that have pulled back significantly, right? Archer, for example, great one. Okay. I haven't had, our strategy has not told us to buy again, so that's why I also haven't done it. You get some diamonds, and the diamonds are there because some people don't trade like me, right? And my way is not the right way. Like, there is no right way, but I want diamonds to be there so you guys know that momentum is shifting. Whether or not you act on that one is completely up to you. I have my strategy one that you guys have access to, so you guys can see which ones I would most likely act on. Okay. Um, Again, neutral. Remember neutral. Here's Bitcoin dumping again. It's just Bitcoin is. I hate Bitcoin. I hate crypto. I'm not a huge fan of crypto. Um, you guys can ask more questions. I'll keep answering. Um, any questions wheel strategy wise? Like neutral, if you aren't super confident in adding, do a CSP, right? If you can. Obviously, not everyone has access to it. I understand that. Do you have a benchmark that you use for your performance? Oh, as far as like what I'm trying to beat? Is that what you mean? Yeah. The hard part with the performance thing is, yeah, I mean, obviously, my goal is always to beat the SPY. I've done it so far every year. The one thing I could, if my benchmark is only the SPY, you can beat the SPY in like one CSP, right? Like you can easily beat the SPY in a S just doing CSPs only. So I strive for obviously greater than the S&P 500, like beating on average an 11% return. Okay, maybe if it's not an aggressive CSP, then it's 3 conservative CSPs, right? So I have a hard part with that. I rather try to be, if anything, I want to beat the top performing index fund, which I would consider growth index fund to be the SPMO. This is the one I'm trying to beat. Okay. And the reason for it is I think it's pretty close to about a 20% annual return in the past 5 years. Okay. I don't really get caught up in that because if I get so, like, again, my goal is always to outperform and do the best I possibly can. Don't get me wrong, that's always going to be the goal. My goal is personal goals and everything like that. So getting caught up in competing against something like an index fund is great. It's a good benchmark. But when you put those kind of standards also on yourself, it's almost like you have a friend and you want to be better than your friend in whatever task you guys are doing. Um, Comparing yourself typically will set yourself up to always trying um, to make moves you wouldn't normally make, um, just because they made the move, right? They did something that, there's a road, there's a fork in the road, and you both need to choose which way you want to go. And just because he went left doesn't mean left you should go left, right? So I don't know, putting those kind of requirements, and I don't think about the benchmarks really ever. I just manage my positions the best I can and do that. Follow the diamonds, dollar cost average in, dollar cost average out, um, and I went over the whole noise thing with my current positions. I'm not selling any positions I have for a loss because of noise. Like, I'll just ride. I'm not taking a loss because the market or people are being bearish. Okay, I'll just ride the noise. But I can listen to the noise whether or not I want to add to my position, right? For example, everyone's been talking about it is HIMS. Okay, I am not worried about HIMS long term. Okay, I am not worried about it whatsoever. So I will continue to hold. Okay. Have I yet to just buy shares outright since everyone's been in this group? I have not. I have not bought a single share of HIMS yet. Okay. I'm waiting for the water to settle. Okay. I am waiting for it to trigger a buy for us, for me to then determine whether or not I am going to dollar cost average down. Okay. So the noise is all irrelevant in between our diamonds. Then you get a diamond, and then you get to determine, okay, do I want to buy this diamond, right? Based on what's going on around you. Okay. Market at all time highs. I still want to have a good chunk of cash based on patterns of the past years of the market correction, the Fed being hawkish. Um, there's still the issue of I'm lost in all the the countries that are mad at us, not mad at us. Like, there's all that's noise. Just so you know, that's noise. Like, I want a little bit more clarity of where we're going, and I don't want to be at all-time highs, leaning more into the market, right? Now, if we take a look at the fear greed index, right? When do you buy in the fear greed index? I think it's CNN fear greed index. Yeah. Okay. We're probably somewhere in, we're in neutral. We're not even in fear or in extreme fear, guys. This is what I say. So here, this is when everyone is terrified, right? This is how everyone feels in the market. And I completely agree. I am neutral. I'm like, yeah, we could go higher, but we also could fall a lot more, right? So when you're weighing your risk reward, I would lean that we probably have a little bit more downside than we have upside available to us at the moment. Um, so if we were down here, then I would feel more comfortable buying. Why? Because this means that the market has actually done its pullback, right? The fear greed index in April was 4 or 3. Okay. That is when people should be wanting to buy, because that means everything's at an extreme discount. Okay. Extreme fear. And they really should put this to extreme discount, neutral. I don't know, overvalued, extremely overvalued, something like that. I should just make my own and change the names, because this is kind of like, it's basically an RSI reading of the whole market, right? RSI, we're overvalued, we're undervalued. That's how you read this. We're in a neutral zone. I'm neutral, so I'm not terrified to buy and take little dollar cost averages in right now, but I am not by any means saying I will be 100% in the market. Last year, I almost never had cash last year. Okay. I was pretty much always 100% in the market or in margin. Okay. But don't recommend margin if you never used it before. I don't recommend it. You need to do some research. Okay. You could lose everything. And people say that, they mean that. Okay. You could lose it all. Um, Any questions, Ticker? If you have Zeta and have a negative 30% return, what do? You buy green diamonds on the daily. Okay, so let's go over Zeta. SPMO, though, great index fund, high growth, momentum S&P 500. Basically, like if you were into the S&P 500 and you're like, but I really want to own more Palantir, SPMO owns more Palantir. SPMO owns more Meta. They own all the things that are S&P 500, but tier them in the momentum. Like they hold higher percentage of it if it's a better and higher momentum stock. So I prefer SPMO even over S&P 500. I just won't own the S&P 500. I rather own SPMO. It'll have bigger drawdowns, but long term, you're gonna have the bigger upside. Okay, so Zeta. All right, Diamond came in. Wasn't one of our buy diamonds. Why? I'm assuming that the weekly and the monthly are bearish. Yeah, okay. There you go. You got monthly. But monthly significantly dropped. This month's not over, so that's probably why it's not doing it. But and we're under the blue line, right? Yeah, under the blue line. So is this a bad spot? I mean, let's pull up our key levels. If you guys don't have this one, we also have a key levels one. It makes a lot of noise on the chart, and that's why I don't keep it on my chart. But when I need to just quickly glance at it, I turn it on, right? Smart money is right here, buying somewhere in this little 1450 to 1550 range. Okay. That's where it says smart money's buying. There is huge support, as you can also see, right? Huge support right here, bounced, 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 and then tons of resistance. So, I mean, there's a huge amount of support right here. But it says smart money green box is buying it, which is basically right there. I mean, it's not huge. So weekly though, right? We still see downside coming into play here. Okay. So I would at least want the weekly to be a white bar, right? I want to see at least somewhat of momentum is not going against me. Now, if you're trying to time the bottom, this could be the bottom. But I don't try to time bottoms. Like that's not what I do, right? I am trying to buy consistently to the point where dollar cost averaging down and everything. Zeta, I still believe long term, right? You're going to be 30% down. So you're right here, $20, right? This is going to come back into play. Whether or not we fall down and we test the weekly trend line, look at this weekly trend line. It has followed this weekly trend line significantly. So where is the downside? If the market did its pullback and did that 5% correction, I believe, yeah, you would probably see this 13 range. Okay. Then you could dollar cost average down. So I would just wait for this weekly to at least start showing some sort of reversal. Because it's, I mean, we could still keep going down, right? But you'd want to at least see some sort of a reversal and then see a diamond to then kind of want to dollar cost average down. Yeah. So always zoom out. I always say zoom out, right? Zoom out, see what we're seeing, right? We see we obviously saw a lot of bullishness this month, not as much right now, right? Because the weeklies are trending down. So, but wait till you see some sort of reversal, some sort of steam picking up, and then follow the strategy. Okay. I'm assuming we're all just still right. What's some big winners? Okay. I know Baining Capital put a thing in there today in the Discord about ALDS. Okay. It is an over-the-counter stock. That's all. So, yeah. No financial advice. I do not say to buy it or anything. It is over the counter. It is a multi-penny stock. Do your own research. Read the articles. That's all I can say. Okay. I can't say anything else. Sorry. I don't even know why. Like I don't even know why that is the case today. Oscar showing some life. Oscar, okay. I want more cash. If you want to ask, I want more cash. I want more cash available to me right now. If I get an opportunity to get out of Oscar, I love the guidance they put out there. Okay, it scares me a little bit. Um, to be honest, like it's super bullish, awesome, super happy for them. Um, and I'm super happy for me if they can get the heck up back to 18 and 20 so I can get the heck out of it. Um, it might be right long term, but right now I think I'd rather have more cash to buy some other opportunities that I believe would. So like Oscar going from 13 to 26, let's just say double up, I think takes a lot longer than ONDS getting back to 18, right? Like I would love for Oscar to hurry up and just get me my cash back, get capital, and then buy these other companies like ASTS when it dips back down to 70 or Rocket Lab when it dips back down to 50. Like I'd rather get back into some of those or more SoFi when it gets to 17. So yeah, I've played with a couple insurance companies and they just take way too long. I'm not patient enough. They're not exciting enough. Personally, they're not exciting. But I understand why people are invested in it. I'm invested in it. I just my perspective's changed a little bit. I've talked to more people in the insurance world. Um, they're not a huge fan. They don't invest in them. So just I've talked and done some like questioning of people that are more known in that industry and high up in that industry, and just not a huge fan. So I'm going to take their word on it. Once I can get an opportunity, they say it'll get back to where you're going. Let me just you can take your winnings. Okay. Looks like some of the market's doing a little bit of a bounce. Iran, look, bullish or bearish on the weekly for Iran. Okay. Getting more bearish. So this is the part where I was saying daily, we're getting diamonds. Bigger picture is telling us we should not be we should not be bullish. Okay. Can you get the little moves? Like I said, there are little waves inside of it, but there is nothing telling us we're going to start our big run right now. Okay. And I'm not saying I can time the market. I'm not saying that. I'm just not wanting to deploy too much new cash into the market. I still have 70% of my cash in the market. I'm not saying that. I'm not saying I'm market's over, we're done, we're going downhill, right? I'm just saying be more particular about deploying. Maybe instead of you would typically do, you buy 500 shares, maybe just buy 250 shares this time, right? Just be a little bit more spread out, give yourself more time. If you see that everything changed, momentum completely changed, go ahead. Start then buying a little bit more. Buy a little bit more. A red day during momentum, monthly went bullish, right? We get a big red day, but monthly still says we're bullish. Go ahead and buy more. The diamond doesn't have to be there. You saw what price your diamonds were at previously. Am I saying it funny? Or you just mean, what do you mean? Am I saying it weird? Or you're just saying like you like the fact that be picky. It's your money, right? You're telling this company, right? Like here's some money, you can borrow it, right? If you had a random friend or one of your friends come up, you're probably pretty picky about which friends can ask you and which friends you would let borrow money, right? That's what this is. It's you don't have to be in the market. This is your choosing to be in the market, right? But yeah, I mean, like look at this monthly has not told us we should be buying Robinhood yet, right? Nope. And when you see a monthly say trim or sell, that is a bigger sign to sell. Dailies will tell you a lot more, right? Because it's a lot of this up and down. Monthly big picture tells you to sell. It's a means sell, guys. It means you should sell. So that's why I say zoom out, take a look. Here's SoFi, 2 sells up here at this 28, 29 range. So if you got the top 32, right? And we're going down. Now, obviously, just like last time, this April moment, it was red for 1 month, right? So that's why I'm saying you can still buy, not saying don't buy, just be pickier, buy smaller amounts maybe, don't lean in as much. That's all. I'm never saying be out of this market, okay? Because if anyone has tried to time this market, they have also missed out on tons of opportunities, right? And every strategy I've really looked at, um, there's a guy on X, okay? Um, I'll pull up. I have his strategy built out on it because I was trying to see if I can use some of his. This is what I always do, guys. When I have free time, I am always, if you find somebody on X or YouTube or something and you go, hey, Colby, take a look at this strategy, send it to me. I want to look because what I do is I take some of their strategy and I figure out, can it make our win percentage higher, right? Can I make our win percentage even better than 85, 90%? Some of them are 100%. Can I make it better? So if you see something and you're like, Colby, can you figure out what he's doing? Because I figured out what this guy's doing and he charges $200 a month for his Discord. And I figured out his strategy and his indicators and I didn't have to pay for anything. Okay. So I take a look here. He likes to do this. If this is green and it touches this line, he likes to buy. Okay. That's what he likes to do. So Navitas, ours said to buy, his said to buy. Okay. So what I took a nibble. I took a small position, right? I don't know what other ones. If it's red, he personally fully exits. If this is red, I personally don't believe that. And the reason I don't believe that is because those red moments become some of the best buying opportunities. For example, let's go take a look. SoFi. Okay. See this right here? He would not have bought because this was red and this was under the line. That is one of the best buying opportunities you just had in that market. Okay. Whether or not he got in at this point, sure. Maybe he did, but he likes to do it when it comes back and test this. So, but then it fell through. He didn't buy this, right? Because it fell through this line. So, like, he didn't trade SoFi very often. No, it's not in TradingView because it's his. He paid for. I haven't pushed it because I didn't want him to think as of right now that I would have stolen his indicators, and you know, I got to be courteous to other people a little bit. Maybe in the future I might put it out there, but this is weekly time frame. This is monthly time frame. So weekly, right? It flipped red, but if you sold here, I mean, there's still a lot more upside that we got by selling up here too. Okay, so I don't love his strategy, but tell you what, I used it to make our strategy better. I don't just love his strategy. Okay. So, because right now he would be fully exiting. If he was in SoFi, he's now fully exiting at 20. We're looking to be buying right now. I wouldn't want to exit. So this is the part where, some people get scared of these red moments, and I like to lean into red moments, but I still want to be picky about my red moments, but some people just don't even play it. And if you don't want to play red moments, just so you know, you can do that on ours strategy here. If you go to the daily time frame, okay, and then you go, I think, to our strategy, you can do this. This is the default. This is the one I just used, so I can see everything, all the weeklies, all the thing, whatever. Only above the line, I think. Let's see. Did that change anything? Hold on, Archer. Let me just. I use Archer because it filters a bunch. Weeklies above. Well, basically, what I mean is maybe it doesn't do it. It was doing it, and maybe when I change the new settings, it doesn't. If you want to, only trade above the blue line. Okay, So buy, right? Okay, it held. Make sure it crosses. Okay, and the second it goes under this line, some people would fully exit. That is a complete strategy. That is an option, right? But I personally wouldn't do that. I don't fully exit because I think some of these opportunities are the best buying opportunities to get in. You just have to hold a little longer. Um, the only ones, so I guess for wheel opportunity, if you go to the option chain and you only see it give you like 4 expiration dates and they're all like 3 months apart, no, that is not a wheel strategy. If you see that the option volume on the stock is really low, not an option, not a wheel strategy one. So I think I would say like BBAI, let's see, what's that? Yeah, I would say probably this close to this 2 billion market cap is probably when you can start thinking wheel strategy for it. Like OSS, I'm sure does not have any good options for it because it's only like a couple, yeah, 232 million. I'm assuming they don't have good options. Okay. As far as wheel strategy goes. Um, so look for volume. Make sure that contract has a lot of volume. If the bid ask, right, if it says your premium is 20 cents to 75 cents, don't do that one. The spread is too big. Okay. You want something that has like, it's saying the 20 cents to 40 cents. That's okay. I get it. The middle's 30, right? It's not a huge range. You want tighter spreads though. Tighter spreads. I want the option chain to show me weeklies, right? So if it only showed you February 20th, March 20th, I'll just April 20th, like it only shows you the monthly ones, not great. I want the ones that show me weeklies, but I trade them on those monthly dates. Okay? Does that make sense? Yeah. So these penny stocks like OPTT, not going to be an option one, right? Like that's just, it's too cheap, right? Um, just so you guys know, this diamond came in yesterday. Today, down 17%. Okay. We got to buy, we got to sell. Okay. Obviously, we didn't have the strategy when this was happening, this move, but this is the point. I would still be bullish on this. I think daily, weekly is still bullish, monthly is still bullish. So now, again, I have to make the strategy very broad, right? So just because not every stock is a one stock fits all. What I would recommend is that when the monthly, for example, SoFi's, because SoFi was a good example, okay? When the monthly triggers a sell, okay, I would trim more than I would trim. So, for example, SoFi on the daily time frame, right? We got these, okay? Well, look at the higher time frames too, right? Okay, weekly, we got a diamond. You should probably trim more on like when you're looking at it. I would trim, so typically trim is 10% or 15%. I got to remember these percentages, but I would probably trim instead of, because the weekly confirmed the bearishness, I would probably trim instead of 10%, maybe trim 20%, 25%, right? Because the bigger time frames confirmed the bearishness, right? Does that make sense? Everyone makes sense? If the bigger time frames are also showing a diamond at the same time your dailies are showing diamonds, probably lean heavier into the action of what you are doing. Okay. SoFi, by the way, is going to show, this is why everyone's calling for this 17 range, is based on this weekly support. It's right here. This is where this is for me being picky with having shares, I would add here. This doesn't really do a whole lot for me, but I still believe that this is a double up within a year. Anything else you guys wanted to go over before I get to my day job? Boo, day jobs. I'm here for any questions, guys. I will do as many videos and everything I can. When you guys have a question, sometimes I'll be able to make a video and publish it so other people can see it too. So I have no problems with answering questions. Okay. Um, I want you guys to understand my mindset when doing things, because unfortunately, I can't put my mindset into a strategy. I can only do, um, yeah, I can't put my mindset of how I'm reading it into a strategy. All I can do is I can help figure out if you guys weren't part of this and you guys momentum, diamonds are based on momentum. So this is bullish momentum flipping, right? We see this, it flipped, boom. Okay. And then you might ask right here, okay, Colby, well, bullish momentum flipped right here. Why didn't it tell me to buy? It didn't tell you to buy because the company was considered overvalued, right? I don't know if Elwa, were you here when I was explaining how like the color coding works and everything? Because I'll explain them again. Okay, perfect. So yeah, it's not going to tell me to buy because the company's overvalued, right? The RSI is too high. Okay, I want to buy when the RSI is lower. So these neutral zones, the RSI when it's in the neutral zone is, where would you think the neutral zone is in the RSI? It's in the middle, right? We're not super bullish, but the RSI is not overvalued. It's not undervalued, right? We're just kind of in the middle. That's why it's like these can be good opportunities. They can present themselves, but you have to be feeling a certain way about the stock in that moment, right? So they had earnings coming up. So yeah, this makes sense, but we lost support, right? I didn't love that we lost support. Does that make sense how I'm reading that? Is that we lost support here? So I don't love buying a diamond because it's going to fight is this, and then we're going to fight this, and then we're going to fight this. Like there's 3 barriers for this to fight. Now I get earnings. The reason this diamond came out, and when you asked me about this, the reason this diamond came out is because earnings was so good, pre-market, everything, momentum showed we should go up a huge amount, right? Earnings killed it. Okay. The market, the macros or whatever, I can't forget what came out that day, but whatever else came out that day took it down. This is the part where I say, doesn't matter how bullish or momentum the company has, macros will take it all out. Doesn't matter, right? So overall, company is still bullish. I'm not saying that, and I'm not worried about that buy if you bought, right? But the macros will wipe anything out. The momentum was there. We were going to run. We were probably going to go back to the 32, right? Not in one day, but over the couple days, I think that would have been the case. Unfortunately, just wasn't that time. We lost support, right? Now I'm waiting. We're trying to fight this. We're going to go down. It just is what it is. But that's how I'm reading it. And unfortunately, I can't tie that into a strategy because there's opinions, and that's the market is. If someone could make 100% win rate strategy, and most of the time, guess what that strategy is? It's a buy and hold strategy. Is typically going to be the highest win rate strategy. Is just to buy and hold it for years. Then that's what this strategy ultimately is, right? We're buying it every time a diamond appears, small percentages every time, and we're trimming and selling it every time we get a diamond. Okay. Whether or not you want to listen to light pinks is up to you. If you want to wait for these bigger trim dark reds, right? If I saw a trim, by the way, right here, let's just say my cost average was also 13 and I'm bullish on the company, guess what? I'm not trimming, right? That doesn't make sense to me. If I'm bullish on the company long term and it tells me to trim for what I own it for, right? I'm trying to see if I can find an example. I guess like probably here. I don't know. Here and then this little trim, like basically right where it is, I'm not listening to it. Sure, does it suck that it went like that? Yeah, and then I got a bigger opportunity again. Right at this bull bear line, I'm not a huge fan of trimming. Okay? Not a huge fan of trimming right at this line. We're just now trying to break it, right? To go up higher. Not a fan, right? Or on the blue bull line again. So I'm not a huge fan of trimming right at the bull bear line, just because if we break that, the upside is a lot more, right? So there's always a feeling. Trust your gut. See the diamonds. See how you feel. Feel about the market. All that, and continue. Okay. I am more like following the sell diamonds and the trim diamonds, but unless it's really close to my cost, I'm not really doing it. But I am more listening to these and being picky about buys. Okay. And that's how you should always be, right? Like, be happy with gains and take them as much as you possibly can, and be picky about giving your money up, right? That's how you should be. You should be picky. That's why when we get buys, we don't get tons of buys, right? 1, 2. Okay. And then we get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 sells. Okay. 2 buys and 13 sells. Take a lot more wins. Be picky about your buys. Okay. Same thing. 1, 2, 3. There's 1, 1, 2, 1, 1, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 again. Okay. Take these all day. Be pickier with buys. Okay. Does that make sense, guys? I'm always going to ask that because I always want people to be willing to say no and ask more questions. Okay. I'm always going to say that. Oscar. Okay. This thing has been, as you guys can see, choppy, choppy, choppy. Right? Yeah. The same thing with Sat L, I guess. And okay, Sat L was the reason why that Peter guy, or whatever. Here. Okay. Buy or add, whatever. That was one of ours, right? We got one. This whole time frame, that's the weekly. Hold on. Then we had more. Okay, yeah. Okay, we had a bunch here. Trim, add, trim, trim, trim. Okay, and it goes down. Peter's, because he only does the weekly, so he wouldn't have bought these diamonds down here. And that's why I knew, I was like, okay, we got to fix something. So if you only go off the monthly, guess what? The monthly just now is flipping bullish, okay? And I think Sat L is a good one to probably start buying at this level because it's flipping green and the stock is going down. Like, what? Wait, what? Like, how does that make any sense? So I think starting a position on Sat L right now is probably a good idea, personally. Just based off monthly becoming bullish, okay, for his. So I see this. His strategy though would have not bought these, and it would have, now it's telling you to buy. On this back test, it is now telling you to buy. You missed this. A 200% return. Okay. I'm not missing a 200% return. Okay. Sure. I own some here. Guess what? That 350 still ran to 6. Okay. That's still plenty of return on that. And then I dollar cost average down here and we got a huge run up. Okay. Now he's thinking, now this is probably one that he's interested in getting into, monthly flipping and all that. So I want you guys to send me other people's strategies that you think pairs well, or you think they are doing really well with their strategy, and I can try my best to figure it out without, I'm not going to pay to learn their strategy. I'm not going to do it. Okay. I will do my best to solve what their strategy is without paying for it, like I did with this one. He wouldn't have bought these. These are where our diamonds are. So I was trying to figure out how to look at it. But yeah, these are the weekly buys. He misses out on some of the best buying opportunities because he waits for this, which I get it. But if I actually did a back test on his strategy, it's like a 30% win rate. But he does things that he knows mentally. Like he knows Fibonacci's. He knows other indicators basically that he self-interprets, not just a set overall strategy that somebody else can easily implement unless you pay him $200 a month. There's a guy on X that has a strategy that I learn people's strategies all the time. Okay, like I really enjoy it. I like to figure out what they're doing. How can we use their strategy to make us better? Um, Personally, this is one I think would be a great buying opportunity. Personally, Sat L. We don't have a diamond on it yet, but I think even today would be a great opportunity coming down. I wanted to take a look on ours. So this is his indicator and strategies that I had to like recreate. So I want you guys to send me people that you think are really good. And here's our bull bear line. So let's see if we can hold this. But I think this is going to, let's see. So daily momentum flipping up. Okay. Weekly momentum has come down, but we haven't lost it yet. Okay. Sometimes you'll see the little flick. Yeah. Little flick of red. And then monthly's going up. This is what I mean. Big picture. Big picture. Start here. Monthly is bullish. Weekly, bearish. Well, that makes sense. We're pulling back, right? Daily, we're creeping up. So I think this pullback for Sat L is pretty much going to be nearly complete. I would say, based on the amount of consolidation in this zone right here, would be a good place to probably start a position. And to be honest, I'm going to do it right now. Okay, I'm not going to do it on my screen because you can't see my account numbers and everything on Fidelity, but like, does that make sense why I'm doing that? If it doesn't, why isn't Sat L? Oh, is my thing signed out or something? I was like, why isn't it pulling up? It's signed out. Does that make sense why I'm okay taking a bite here and not wait for a diamond? Because I don't always have to wait for a diamond, right? Like, you are a human, not a robot, right? Like, do with what you're comfortable with. Now, if you wanted to wait for it, absolutely wait for it. Like, give it a sec. Correct. I did not say I'm going to like this is look at the market cap. 452 million market cap. I will probably buy 100 shares. 100 shares. Right? I'm going to put $300 into this market. Does that make sense why what I'm saying? Like, I am not putting tons of money into this market. I have okay. How much cash? I don't hold on. I have 30% of my portfolio cash. I don't know, 300 bucks, I will have 29.999% cash. Like, it's a very small percentage, right? Does that make sense? It's also on a 4% pullback today. Okay. Bigger picture, right? I said bigger picture, right? Here. Okay. For example, I get the broader market, but you got to also take into account the broader time frame of the stock. How much do you intend to invest in total? Probably would be, hold on. Probably would be, sorry, I'm doing some math here. Probably 5,000 would probably be my total I would put into, for me, this company. Okay. Yeah, which would be 10% buy for me would then be 500 shares. Or $500, sorry. 500 bucks. So I could buy $500 worth. Technically, if I waited for a diamond. Since I'm not waiting for a diamond, right? I need to be more conservative. So I'm going to buy only 100 shares. If I get a diamond, then we can go ahead and do more, right? That's just me looking at a stock and saying, cool, we're here. Daily is trending up, momentum. Monthly is still trending up, and we're not done with the month. I understand that, but if you take a look, when this monthly flips bullish, we run, right? So I think we're going to be just fine. Weekly, yes, bearish. But based on the monthly going higher, I would assume, this is why I'm not waiting for the diamond, because I'm assuming things right now, which I could be getting in trouble. But what I'm going to do is I'm going to go ahead and I'm going to, what are you saying? Sorry, on the 2-hour time frame, I see that is below the green trend line. Would it be more or safer to bet if we add shares above that line? It's always safer to trade only above the line. Always safer. Okay. But what happens is smart money, right, tends to, again, macroeconomics are wiping. Again, you got to be doing like, and if I want, I could wait for the next 2-hour diamond, right? I just see there's so much support here. If we take this green line, like, look at all this support. It touched here, touched here, touched here, touched here, touched here, touch. Like, we're at the trend line. Now, is the mental number like $3? Probably, right? Right here, 311, right? There's a little bit of resistance, broke through it. I don't really trade the 2-hour personally. I don't. I stick to the daily time frame. Daily, weekly, monthly, just because I stick to the big pictures. I don't really stick to the small pictures. I get trying to time the bottom. I get it. That's just not me. I don't try to time it. So for me, like I said, I see, even though we're going down today, momentum is still trending towards bullish. Okay. Again, it's a very small percentage of what I am buying here. Okay. So very small. Like, I'm trying to ease into it. Now we get a diamond, 10%. I'm putting 10% of what my position would be. Okay. But this allows me also, I don't know if you guys have ever done this where you just buy one share of something that you want to buy. Have you guys ever done that? It was a strategy I learned when I was first starting off. Yeah, so if I was like interested before, like, I never really did a watch list. I wasn't huge into watch lists because it just, you start making your watch list so big. And so what I did was any company that I was actually truly interested in buying, I would buy one share at the time of which I was like, this would probably be a good time to buy. Let me buy one share. And then before I had all this strategy and everything, this was like early stages. And then that way I could be like, okay, if I buy one share right now and the stock goes up, I can be like, oh man, I should have bought more. And if it goes down, I'd be like, okay, it's down 10% from where I initially wanted to buy it. Okay, now it's down 15%, right? Like, you can track that better than just like kind of seeing what the price is. Okay, so that's just something. I still think tons of support here. Let's go look on social media. I'll go to social media. Don't look at that. That's work. Don't look at that. Let me go to social media. Like, and because I don't care to time the bottom too, missing a couple cents while the stock maybe goes back up is like not a big deal. So, right? Urge crypto companies, banks to reach out. Yeah. Let's go look at Sato. Always look at what other people are saying. So if you see a diamond on a company, again, trading happens on our diamonds the following day. Okay. You see the diamond, you can wait till the next day. Okay. Because a diamond means there should be more upside, right? You don't have to catch the bottom or catch the top. But you want to see what everyone else is also talking about, right? You want to see some bull cases, see some bear cases. So he's thinking we're bullish, right? He's thinking $3, which we're pretty dang close. We're at like 317, 319. So we're in this demand zone he's talking about also. Okay. So that lines up. Cool. Okay. Another person, touch. 320. Where are we at right now? 317, 319. Okay. Another person lines up. Okay. This person thinks we go 291. But 313 is the next leg down. You remember how I said Elliott waves? A, B, C? 5 waves up. 1, 2, 3, 4, 5. Okay. Why didn't he count this as a wave? Because each wave up 1, right? This is 1, is 3 waves. 1, 2, 3. Okay. Same thing up. 1, 2, 3. Okay. 1, 2, or sorry. 1 up, 2 down, 3 up, 5. Okay. So everything happens in waves of 3. And then each wave of 3 completes 1. Okay. Does that make sense? Adam just brought a starter position in Redwire. So let's go take a look at Redwire. But does that make sense? So this guy thinks that we're going to go down, we're going to up back to 487. I don't know if that happened. I haven't looked at the chart, but then we go back down to 291. So starting a position of 100 shares somewhere right here where everyone else is also thinking there's a good amount of support is not a terrible idea, right? If we go down further or we get a diamond a little higher than where I just bought, then I can lean in a little bit more. All of this making sense, my thought process of what I'm looking at. Why I go to X after I see a diamond, I go see what other people are also seeing, try to take in other opinions. Does that make sense? Bear zone, bull zone, right here on a volume shelf. I have a hard time believing this part just because of where space is going right now and all of, SpaceX and ASTS and Rocket Lab and all this. And Redwire's been booming, So what does this guy see? Boom, boom, boom. We dip. See a little consolidation phase right here in these 3s, and then he believes we see the expansion part up to 12. Okay. Here's another one. Pull back. He thinks we touch here. We go up to 450. If we went up, by the way, we would most likely get a trim signal, so you could trim. And then he thinks we go down lower. Okay. There's a bear case. But where does he see the big picture? He still sees a 300% return big picture. Okay. That's what I'm saying. I don't care really a starter position here. Does that make sense? Big picture still sees $9. I don't try to time the bottom. We just keep adding as we find the bottom. Right? Okay. Use X, guys. See what other people are doing. Do they have a bear case? Now, if you see a bunch of bear cases, right, and bull cases, we'll take that into account. Is it worth the risk? Bull cases tell me 9, bear cases tell me 2. So I can go down 50% or I can go up 300%, right? That's a 3-to-1 or that's a 6-to-1 ratio, right? So it's probably worth a little bit of risk. So fair value gap, he sees 240 it could go down to as far as the bottom of the fair value gap, but he sees also long-term 7, 6, 9, 10. Okay. So a little bit more downside potential versus a double up. Okay. Same, different guy. I think this is the same. Someone else just reposted this chart. I think this is the actual guy who posted that chart. We had Sat L. He posted it a while ago. He sees a cup and he sees a bull flag. Okay. So that's what I do. That's what I go through. I see, take a look at, do I see some other stuff? We can go through, let me put the order in real quick. Oh, give me 1 sec, guys. Nope, never mind. Hold on, 2 seconds. I'm going to actually have to hop off and get to work right now because I'm 8 minutes I got to be on. So, all right, guys, look for that alert. I'm going to put a buy alert for SATL right at this price at 317 if you guys are watching. So I'll talk to you guys in a little bit. All right, guys, I appreciate your guys' support.